Hello everyone, my name is Marcello Kolax and I am the Managing Director at Clever Markets. You are watching the weekly outlook for European energy markets starting 9th of October 2023. So let's get started with the TTF. What we see here is that from the very long downtrend that was going on since August 2022, we have since bottomed out in mid 2023 and we are now edging higher. I still talk to traders telling me that we are in a fundamental downtrend. Well, that might be true, but what is actually happening on the chart is a little bit different. So what we see here is a rectangle that has been pushing price into increasingly in a sideways range since June. We also do have the ascending triangle that we can now draw in. That has pushing price in an increasingly tighter range, and these ascending triangles usually they're resolved to the upside. So what we see here is we have this between like 45 and 48. The lines are a little bit blurry, the resistance, but overall this is a thick resistance area to take before the market might push higher eventually. So we are not, the front month is October now, so it would only make sense for the market to rise further. We have seen over the past couple of weeks, months, that the bulls are very sensitive to any sort of bullish news. So we did see that with the maintenance in, was it June, with the Norwegian maintenance. Now we had the slow ramp up of Norwegian supplies as well, and we did have the LNG strikes. So everything always pushed the market higher significantly, although for a short time. It does show that the bulls are very willing to move higher. However, the bears, there hasn't been much bearish news right now other than the stable LNG, the full storage sites, and the mild winter expected. These are more like long-term factors that have push the price lower over the entire year. But what we see now is that the bulls are getting increasingly confident to actually push the price higher. So until we move above 50, we are in a sideways trend, in the mid-term sideways trend for the TTF. On to the daily chart on the TTF, we do see that we still have some trading opportunities available to us even within this rectangle. So let's have a quick look. Overall, within this ascending channel, the market has been swinging higher gradually, and just more recently we did so. This informed the TTF's near-term bullish trend that overall we are swinging higher until recently. But in accordance with Clever Markets methodology, we have pushed lower essentially. So we marked our lower lows and lower highs, and that essentially means that the near-term uptrend was ended, and we are now in a sideways trend. Some even shorter term traders might call this a downtrend, which is perfectly fine, but we would like to wait for a push until below 33.76 before calling a bear trend. So what's going to happen this morning? Let's have a look at the hourly chart. So on the 15-minute chart, we do see that we do have a potential double bottom, a tentative double bottom forming here with the two troughs and the neckline here. And the market is very comfortably in this rising channel. So what we do see might be with this bearish Harami and bearish stochastic and still kind of bullish momentum, we might see in the early morning on Monday a drop lower. And if this support area holds in the 37 range, we might continue to swing higher. If we then push above 38.85 on the 15-minute chart, then we would activate an upside target on the 15-minute chart that would then probably guide the daily price also higher, and we might be making a little bit of a push higher. However, as long as we still make lower highs, we would still not turn bullish again on the TTF, although overall the outlook is rather carefully bullish with an eventual break above the 50 mark to be expected. We do see that the stochastic has been pushing higher, as has the MACD. All right, let's now have a look at the NBP. More or less the same thing happening here, but with different numbers. Let's start on the weekly chart. So also the downtrend is long over, and we have been pushing in this rectangle since early June. We have now been able to draw in an ascending triangle, which also usually resolves to the upside. And we can see that we are in this 114, 115, 125 resistance area that needs to be cleared in order for the market to push higher to the 200 mark. We do see that the MACD is looking fairly optimistic, as does the swinging higher on the stochastic. So what does that mean on the daily chart? Even though we are on the midterm sideways trend, we can still get some trades in. So especially within this ascending channel, we also did see, okay, we didn't make a new high since August. Also, we started making like lower lows and lower highs. For some traders, this might be enough already to pull the bearish near-term trigger. For us, however, we are still a little bit neutral, and there's even a potential for a little bit of bullishness. Because can you see we have like the bullish engulfing candle pattern here? We do have a little bit of bullish stochastic signal, so there might be some room for a little bit of price gains. How far can the price go? Well, for that, we look into the 15-minute chart. So first of all, same picture here. On the 15-minute chart, we do see a bearish Harami, which usually leads to losses early on in the session. That is expected. But if we find support near the 20 EMA, or even slightly below that, near 91, 92, and we continue to bounce higher, then a push above 96 would also activate this tentative double bottom, or would complete it, and we would get a target that would then have a bullish impact on the daily chart. So in summary, we are midterm neutral, and we are swinging lower within this ascending channel on the daily chart, with a potential to eventually break a little bit higher, and this trigger would be given at 96. This is a very near-term play, but you can scale into the trade, of course, as same as on the TTF. So push above 96, then we could be looking for, which is here, then we could start looking maybe for somewhere around 111.33. But on the way higher, we need to look for signs of weakness, which will be first visible on the 15-minute chart, because even if we move a little bit higher, if we still just end up making lower highs, then that wouldn't bode well for the bulls. Overall, however, I do believe eventually we'll turn bullish again. And that's it for the NBP. Let's now have a look at Brent. Well, that was quite dramatic, wasn't it? So luckily, if you are a reader of Clever Markets, or you receive our services, then luckily you would have gotten out pretty early, around just below 90. That's when we gave the bearish trigger, and probably you would have been able to ride the whole trend from, what was this, the high 70s. Back then the target was at 100, and we fell short just a little bit of it. We did go to nearly 98, so I think good enough. So let's have a look at the weekly chart. Here we are at the moment neutral. Why are we neutral? Why are we not bearish? Well, we did push below this ascending channel on the weekly chart, but we have not yet made a lower low. So what we want to see is actually making a lower low below 81.94, and then we would talk about maybe midterm bearishness if tools were to confirm this. Right now it doesn't really look like it, because MACD still has a lot to go. So we'll see. For now, midterm neutral, but there's a chance for a few more losses probably. Let's have a look. All right, looking in onto the daily chart, we would have gotten out fairly early here in the 90 or 89 area, something like that. So which wouldn't have been all too bad. And we did see that the week ended with, well, a bullish hammer, or maybe even you can call it a questionable doji candle here. We're obviously finding some support here. It's looking good. So the question is, what's happening next? We do see that we did not get any bullish signal or any sort of like reversal signal with this hammer slash doji candle. So the first inclination would be, oh, maybe we just see a little bit of an uptrend before we continue lower. So how likely is that? Well, let's have a look onto the 15-minute chart. The daily chart is bearish because we did start making lower lows and lower highs right here, and we broke below the channel. So bullishness is definitely gone past the channel, and we are now even bearish. So let's have a look on the 15-minute chart. It is not giving us much. The tools are not very indicative. The market has been moving sideways, which was expressed in the doji or hammer candle on the daily chart. Not much is happening here. But these tight ranges actually can help us to get an idea for direction for the start of the week. Because if we break below 84.27, then we could likely go to 83.84, and then we could likely go to 83.44. So we get like a staggered approach to maybe more bearishness. Same on the bullish side, right? A move above 84.87 could lead to a move to 85.96 and so on. So these tight ranges are actually quite useful to scaling into a trend or into a trade on a higher level chart. And also the risk reward would be quite favorable because with very little risk, we could like scale into possibly what could possibly be a bigger move on the daily chart. So intraday neutral, we need to see a break. Near term bearish, and what we might see is make a little bit of a correction higher. That would be completely normal. Then we'll see if we continue lower or not. And neutrality is enacted on the midterm chart with the break below the channel, and we would turn bearish below 81.94. And now it's time for us to have a quick look at coal, API 2. All right, okay, let's start with the weekly chart. Actually, that was quite exciting. Finally, something happened on coal, and quite predictably so. So we do see that on the weekly chart, we have been moving into this triangle, into an increasingly tighter range, and we did break a little bit below that, but this would not, as of now, undo the mid-term neutrality, because what we want to see is a second close below the triangle. Ideally, what we are trying to do, maybe wait out until 100. This is what some traders might be doing before putting on some bigger positions. But it seems almost certain that we will go from 120 to 100 at some point. For the midterm, why are we not going bearish still? Because triangles have a tendency to convert into rectangles. Because can you see we have a low here and a high here, and now if you break lower, then more often than not, we do get a chance of support building here before moving higher again, resistance, support. So these triangles, if they're like resolved up until like the apex very close into the apex, then the chances of this just turning into a sideways market are a little bit higher. Accordance with my experience. So zooming in on the daily chart, we did have this daily rectangle that's been going on since July 2023, and we now finally resolved below it. And the two consecutive closes below the rectangle and the bearish signal on the MACD did give us a bearish near-term signal. What we're seeing now is, as expected, a little bit of a pullback. That is fine, pullbacks are fine, that is completely healthy. And if this resistance area at 120 holds, then this might be a good entry opportunity for some more bears to drive the market lower. I just want to quickly draw in the Ichimoku cloud as well to simply show you where we are. So this is like really important support level, and what we want to see is break below this, and this is called the lagging line. We want to see the lagging line break lower as well, and then the bear trend on the daily chart, maybe even on the midterm chart, would be more secured. But what's going to happen early this week, this morning? So let's have a look at the 15-minute chart. Here we see that, yep, a little bit of strength might be expected this morning, but overall, we still didn't get a bullish signal on the stochastic. I don't really like drawing in Ichimoku clouds on line charts because it gets way too confusing. But you can see that overall we are heading lower with the Ichimoku cloud. So what does that mean? Overall, it means that yes, there might be some retest of 120, but overall the idea is still to move lower. And now it's time to have a quick look at EUA, European Carbon Emissions Certificates. Here the picture is quite unambiguous, it seems to be very clear to me. Let's start with the weekly chart where we are bearish already. Because we did see the 100 level being tested and tested and tested 3 times since Q1 2022, and it holds. It holds. The ascending triangle usually is resolved to the upside. Not the case here without any confirming signals as well. That was pretty clear fairly early on. So, but what we did see is 2 consecutive closes below the ascending triangle a couple of weeks ago. So this turned the market bearish. We did see a little bit of a retest here, and this is it 20? Yeah, this 20 EMA is holding fairly nicely as resistance, and now the expectation is for the market to overall head lower. We also do see that overall the stochastic is swinging lower. Yes, we did get a little bit of a bullish signal here, which might lead maybe to another bit of a recovery, but overall the idea is to go lower. Then let's have a look at the daily chart. So can you see this on the weekly chart? Yeah, is exactly this trend channel that we've got going on here. And this chart is bearish as well. The daily outlook is bearish within the descending channel. But can you see we did hit the boundaries very nicely in the beginning, but now it's like kind of flattening out. Yes, we do make lower lows, but less than previously. So I haven't drawn this in onto the chart yet. It's not part of the written analysis, but there is a chance for a falling wedge to be drawn. And falling wedges are usually resolved to the upside eventually. However, this is not a bullish signal. So falling wedges can move lower significantly for a fairly long time. This is a warning. This is not a trading signal. Also, we do see that the MACD overall is pushing lower, but not as much anymore. So the lows are not as low as they used to be. So it is a little bit of a warning. But as with other markets like Brent, for example, yeah, the trend can go on for a significant amount of time before actually breaking. So overall, near-term bearish, and there is potential for a little bit of an upswing here. We did see that, but overall, we need to see a move below 79.5 to continue the downtrend. So what's going to happen at the start of this week? Well, here zooming out, we do see that we're still making lower lows and lower highs overall. And what we're seeing now here is potentially the first higher low. Got a little bit of a sideways range here. So what we want to see is essentially a break above this range at 80.96, or maybe below the range, below 80, in order to make a directional call. And very early on in the week, we will then be able to see if we break higher or if we break lower, to see what's going to happen on the daily chart. Yeah, are we really having a little bit of a bullish correction here, or are we immediately pushing lower? My money is on a little bit of a sideways trend actually, and but overall the near-term trend remains bearish. And now it's time for the JKM. Here we only look at one chart, and it is a line chart because the markets are, yeah, well, it's just a JKM, isn't it? Okay, so in the midterm, we are still bullish within the channel, absolutely. And in the grand scheme of things, we are still making higher highs and higher lows. But what we do see is that the MACD has been topping out. So we did make our first lower high on the MACD, while the market is still moving higher, which is in itself a bearish signal. So in the near term, we are fairly bearish, and we could see a move to 13.5 in that area. It is softening off a little bit, but it's not looking really good right now. So mid-term bullish, near-term bearish. We see a correction. This level 13.46 is the old range high, so this could be revisited because it's the only reference point that we have right now. And that's it for the JKM. And now it's time for a little bit of euro dollar. So on the midterm chart, we are still bearish. We did have this ginormous downtrend that's been going on since summer 2021. We had this correction higher, and most recently we have broken a couple of weeks ago. We did break below this peak, below this trough. So this turned the midterm market initially bearish. So can you see? We did have from late 2022, this uptrend, and then we broke below this level. So ultimately bearish still. However, there's first signs of bullishness emerging on the daily chart and also on the weekly chart. Let's stick with the weekly chart for 1 second. So one thing I want to point out here is we only get very few bullish signals on the stochastic. We did get one here, and now we get one here. And these stochastic signals are significant because you can see they are really leading to strong gains. So now we are midterm bearish, okay, but this also means that we could see the market retrace higher, maybe even until the 61.8%. That's what I'm calling in order for it to be like the largest extent of a correction before you have to start calling it an actual midterm bull trend. We also did see that the bullish stochastic signal was accompanied by a hammer. So a hammer is a bullish signal, which means that there's chances of the market moving higher. In combination with that, we do see that the MACD is comfortably pulling lower overall, swinging lower. So what does this mean? Got a bullish signal here, got a bearish signal there, got a bullish hammer here. What is happening? Simple. These signals are not confusing, they make a lot of sense. The MACD shows us the big trend. So overall, the big trend is going lower, midterm bearishness. However, in the more near term, we could see a correction higher, as shown by stochastic and the bullish hammer. This correction higher will be led by the Fibonacci retracements. Can you see? Up until here would be 100% retracement, so you'd go all the way up until here. We don't want that. Probably until 61.8%. What we need first is a move above the 23.6% Fibonacci retracement in order to really kickstart the whole uptrend or the upside correction. But overall, the idea is after we peak to move lower still. So this anticipated up leg would be first visible on the daily chart, or is best traded on the daily chart. Can you see the same fibs are here as well? And we did have a bearish hanging man candle at important resistance. It's a 20 EMA. But I do believe that we actually push higher. So this is a bearish signal, but we didn't get a bearish confirmation on the stochastic. So I believe that actually there's a chance to move above the 20 EMA towards the channel. And the channel coincides with the 23.6% Fibonacci retracement. So a move above this area would then launch the entire up leg. And this would then also turn the market bullish instantly. Why bullish instantly? Because the channel and the 23.6% Fib retracement, they align, and we would be above the 20 EMA. And the tools, of course, right now are confirming it as well, at least a little bit. So there's chances for the market to move higher. Here, I applied the exact same strategy as on Henry Hub and on subsequent markets as well. So we are in this tight range. Let me get this out. Let me blow this up. Okay, so a move below 1.0571 would probably see a retracement lower, which would slow down any bullish impetus that we have on the daily chart. Alternatively, a move above 1.0602 could then launch this Fibonacci extension. Yeah, so let's have a look at this range, how it resolves this morning, and that would then either lead the market lower or higher, which then would on the daily chart confirm the market lower. Yeah, this really is a hanging man that will turn the market down, or we simply see a continuation towards the 23.6 fib. Right now, I would think that we are more likely to push higher with the evidence available to us, because on the down leg, the volume is moving down, and we did end the session with a bullish signal here as well. Now let's have a quick look at Euro Pound. Okay, so the mid-term downtrend is active within this descending channel. And we do see that we're edging at this 8701, which is the channel and also this old high. But we did have a bearish hanging man candle here that was confirmed with another bearish red weekly candle. We did get a little bit of a bearish signal on the stochastic, although the MACD is edging a little bit higher, but not significantly. So if this area holds, and it seems to be holding for now, we are more likely to swing lower within the channel. Midterm outlook remains bearish. On the daily chart, however, we can see that this little up leg and then this hesitation, these two red candles on the weekly chart are turning into this, which means hesitation at the weekly channel. The daily chart is bullish because we did push above the triangle, and we did activate a triangle upside target outside the channel. And this here for now is still classified as a little bit of a correction to the uptrend. The near-term uptrend is correcting lower. This could be even drawn in as like a pennant or a flag, which would usually lead to more gains. So the picture on the daily and on the weekly chart is a little bit split. But overall, it does really seem, can you see how the stochastic is pushing lower, how the MACD is forming a peak. So this, in quotation marks, like flag or pennant, it's still pending, yeah, not confirmed, might upend this up, like this uptrend. So there would be a case to be made to turn the near-term trend neutral fairly soon. Then we'll have a look at the 15-minute chart, which is simply just a little bit of a big old sideways market. And what we want to see essentially is a move past this range in order to make a call. And we end our video with pound dollar. As always, looking at the weekly chart, we are still bearish because we did break below this trough a couple of weeks ago, and we are now heading lower. So that keeps the midterm downtrend alive overall. But we do see a little bit of a hammer and a little bit of a bullish signal on the stochastic, which doesn't give signals on the weekly chart fairly often, but if it does, it always results in significant upside. So this is a fairly reliable indicator. So now the idea is that if we break above 1.2297, the 23.6% Fib retracement, that we could make it all the way to 1.2720, which is the 61.8 Fib retracement. This is confirmed by the hammer and by the stochastic, and the volume is looking good as well. But before we do that, we really want to see a break above 23.6%. Then on the daily chart, can you see like this down leg is this channel here on the daily? And we are swinging with lower within it very comfortably, and we did get a hanging man bearish candle just below 20 EMA resistance, but we did not get a bearish signal on stochastic. So the idea is actually that we are able to break higher fairly soon. And you can see we have the same fibs in here. So I would undo maybe any shorts above 1.2297, which is also coinciding with the 20 EMA. So above this range, probably I would exit my short positions and maybe even turn bearish above the channel. So can you see here's a difference to euro dollar, where the channel and the 23.6% Fib retracement, they align perfectly, but it's a little bit stacked, so I will take it like one after another. And here the idea is to make it all the way to the 61.8% if we break this entire area. So what's likely to happen at the start of this week? Here once again, this slightly confusing fib retracement, fib extension debacle that I put on the chart here. So once again, a move below the 23.6 fib could see the market decline to the 61.8, and above 23.6% fib extension, we could make it hopefully all the way until there, which is this up leg then simply projected into the future. So what that would mean for the daily chart is exactly this scenario where the market needs to make a decision. Do we take this bearish hanging man signal for the market to move lower again, or do we simply ignore it and push above the 23.6% fib retracement? So that was it. We did have some fairly interesting markets for this week, so keep an eye out, be careful, and all the best. See you around. My name is Marcello Kolex. I'm the Managing Director at Clever Markets. Find me on LinkedIn. I am fairly active there, and get in touch. Bye-bye.